second thing I look at is volume. And volume is basically a measure of the shares or contracts in exchange that are exchanging hands in a given time period. It's instrumental in giving you that emotional reaction, showing you where are the emotions in a move. This is where the participation is at in a move. Where are traders panicking? Where are traders uncertain that something's going to happen? Like a lot of times when volume is drying up, it's showing you that traders and market participants, they don't really know for sure where a move's going to go. They're hesitant. They're seeing a lot of contradictions in their indicators. There's just not that overall belief that it's going to go a certain direction. Most traders want to see confirmation on move. They're waiting for something like a breakout, or they're waiting for volume to pick up before they enter a position. They're waiting for basically the train to start pulling out of the station to show you that the train's actually going to go someplace. And what I like to do is get into a position where the train is still stopped before it's moved, before it started taking off. So I'm not having to run to try to catch that train and jump on it and break an ankle or something like that. You know, I want to try to get on it before it takes off. And volume can show me that, because I can see that if I have, for instance, if I have a stronger than average downside move, then that's showing that exhaustion is coming in. So on this chart, we looked at it a little bit earlier in terms of pace, but this is an example of it in terms of how does the volume figure into the pace. What you'll notice is that on some of these stronger moves, you'll have exhaustion bars where it's the sharpest volume of a given time frame. Like this, for instance, this move here into 11 o'clock. It's the sharpest move for, about half an hour, where you've had the selling for about half an hour, but you've had no volume. And that gives an indication of a smaller exhaustion move here. It would be on like a 1 minute time frame. The larger the volume exhaustion is, on the larger the time frame, the more significant it is in terms of what the larger pattern is going to do. For instance, if you have a volume spike on a 1 minute chart on a downside move, then maybe it's going to slow, reverse, stall on a 1 minute time frame, but that doesn't mean it's done on a larger time frame. It can just be a small minor correction. Whereas if you've got a large volume surge, and it's basically the largest volume of the day in a YM or an index or an intraday stock you're trading, then the chances are higher that that's going to be the low, that that's going to be the exhaustion move in that security or in that index. What you have to be careful of, though, is that a volume surge or a volume spike is not necessarily the absolute price low. It's just indicating that it's an exhaustion move. And like I mentioned earlier in terms of pace, a lot of times a reversal or a correction coming off of a more rapid downside move where the momentum is significantly stronger than average, it's going to take a little bit of time to turn over. So you can see like some lower lows where the momentum just slows after the volume has spiked and increased, but heads a little bit lower before it really turns around, because that momentum needs time to catch up and turn around as well. Another thing where you can look at volume is in a trend channel or a trading range. For instance, if the pace in a trend channel is slower than average, then volume is usually going to decline along with that move, and it creates the favorable conditions for a continuation pattern. So in this case, for instance, this is a trade I had on the YM about a week or so ago, and I noticed that here we had this sharp upside move at 10 o'clock. Again, it took a while for this momentum to turn over. It had to do so by forming a descending triangle along these highs. It couldn't just flip back around and continue to head lower very, very quickly. Even though it got off to a start where it turned around quickly, it took a little bit more time for that momentum to pick up on the downside. And then it fell into this congestion move here, heading into around 11 o'clock or so. And notice the pace or the momentum within this move. Initially, it's not really giving you much of an indication of what's going to happen, just like it didn't over here. I mean, if this had popped higher at 10:15, fell slower along here into like 10:30, it could have continued higher with a small continuation pattern. Would have been a very tight scalp pattern, but it still could have done that. Instead, the momentum slowed along this low out of 10:15, basically hugs the lower end of the trading range, and that gave the indication that it was likely to break lower, which it did here. And the same thing here. You've got average volume on the downside, similar on the upside. That's an indication that it's going to fall into a trading range, just like it did back here. fall into a triangle, some sort of range like that. So I want to be more careful trying to get in on pivots after I have a second pivot in within a trading range, because I know that the chances are it's going to become even more congested, more overlap, a lot more choppy action coming into play. And that's what happened here heading into 10:15, or 10:45 rather. At 10:45, we started to see it congest with a slower upside move. Basically, it almost hugged this lower end of the range. Came back and tested the lower end of the range a little bit better here, just a little after 10:45, and that's where I became interested in it and took a short right in here before this breakdown began. Now, I still had to hold through this congestion here, but it allowed me to get into it because the volume was the lowest here heading into that move, and the pace was now a lot more gradual. And it allowed me to figure that, well, chances are, because of the momentum and because of the volume, it's most likely to break lower. It's most likely to head down instead of turning into a reversal pattern. And so instead of waiting and trying to catch it when that trend channel does break, and it could have just kept falling here at 11 o'clock. 11 o'clock is one of the major reversal periods intraday. It gave me the opportunity to get into it before it tried to break lower and before that move would really increase in terms of the momentum. Of course, you have the volume spike here again at around 11:05, which indicates the exhaustion and that the trend move is coming to a close. It's slowing. It's done, basically. It needs a chance to slow and correct a little bit longer. It could have fallen into more of a range again, formed like a bear flag, that type of thing. Instead, it kind of kept creeping higher. But notice again, sharper than average downside move, it took more time to correct. It wasn't easy to just pivot here and then shoot back higher. It took this lower or this longer congestion area for it to correct and turn back around. I mentioned a little bit in terms of anticipating the breakouts, the volume change as the volume is progressing. What you notice is that right at the end of a trading range, often the volume will be at its very lightest. And this is where I used to wonder, well, should I get into a setup here? Is it going to break? Is it going to fall apart? And there's just a lot going on in my head in terms of, well, do I really want to take this? I'm scared nobody else is trading this at all. Maybe it's just going to fall apart on me. And what I found out was that when that thought process started, when there was very, very little volume coming in at all, that was usually only a minute or two before the breakout took place. So if I kind of went against what my intuition was saying and went ahead and placed a trade when nobody else was placing a trade, I was getting into it before a momentum move took off. And even when I was wrong, my pricing was so nice that a lot of times it came back into that level pretty quickly, and I was able to take a scratch on a position instead of taking a large loss. And also, I could keep my stop so tight that my risk to reward was it became astronomical. I was taking these breakouts where I would take like the high of the range here, for instance. Well, this isn't a great example, but like I would take like above a previous pivot high within the range, which is kind of, the textbook which they teach you to do, and a lot of, the books you pick up at the library or your bookstore. They say, well, take either the high of the range or take the last pivot high of the range and put your order in above that. Problem with that is, look here when that broke. The momentum increased significantly. So you've got an entry that's like maybe in here, for instance. Your stop's down under here. Whereas if you went and took it based upon the volume changing and just, the momentum changing as well, and just trusted that instinct, your entry's closer to in here, your stop's tighter, so you can take twice as many shares and still have the same amount of risk, which of course means you're ending up with twice the gain and still not risking any more than you would have otherwise. So it's going against intuition to take a position where there is no other activity, where there is, a lot of indecision, and go ahead and take a position there. And I do the same thing when I'm taking pivot trades in the indices themselves. I do, I guess I should have told you this a little bit earlier, but my style of trading now is I kind of do a little bit of everything. I started as a swing trader, which is holding a couple of days at a time. And then I moved into adding day trades from there. And now I do a lot of scalping even in the futures. And for a futures market, you have to have like a larger repertoire of skill set to be able to participate actively and do well. And when something is showing a lot of volume on the downside and exhausting on the downside, those sharp volume moves, a lot of times I'm taking pivot trades coming off of those lows where the volume is the sharpest because I'm anticipating that it's going to bounce and correct and turn around off of that. Here's another example going into 1030 where volume again right as its lowest level just before the trading range broke higher. Let's go ahead and take a break here for a couple minutes.